and welcome to this special edition brought to you by Republic Business. I am Gunjan Rajput and today we are here to decode the market. And we have with us a special guest, Mr. Sudeep Shah. He is a Deputy President at SBI Securities. Hello sir, we welcome you with us on Republic Media Network.
Hi Gunjan. Thank you for inviting me to the show.
Hello sir, so the D-Day we were waiting for was the 2nd April, the Trump reciprocal tariff impact. And now it's finally here. What's your outlook on the market? The market opened on a lower side today. IT stocks were under the pressure, but the pharma stocks were soaring high. Now, in the middle of a day, at the moment, the Indian stock market is at flat. What's your outlook on that?
Gunjan, so see, two things here. Firstly, if we speak about the tariffs, it's slightly higher than expected. Everyone was expecting a blanket 22% kind of tariff that could be announced, but it is 26% for India. But the better part is that for China, who is our stiff competitor, the tariff rate is 54% for them. And my sense is that slowly and steadily now the markets will come back to normal. It was last 2-3 months, it was in anticipation on a daily basis what Trump would announce, which sector could be impacted, and that was leading to a widespread panic. But my sense is markets generally revert back to normal. You see mean reversion in a lot of stocks, lot of sectors once the panic subsides. And my sense is that now in the coming maybe a couple of days from now also we could see some kind of volatility. But post that, markets should be back to normal business. Earnings, the numbers, the quarterly numbers, that would decide the further trend. So I feel that now the Trump fear for now ideally could be out of the way.
Got it, sir. So, if we specifically get into the sector-specific stocks and we go on the IT sector, sector saw a decline both in the Indian market as well as in the US market. And in the Indian market, major hit were Infosys and HCL Tech, which were under the pressure. What challenges does the sector face and how could it impact it in the long term?
See, two things now. The tariff does have an impact, or the sector will have to navigate that. But along with the tariff, now what I feel is that important is how the numbers stack up for the quarterly results that would be announced, say in a week's time from now. So as I said that post this the tariff tantrum, now the numbers finally being announced by the US president. Now I feel the IT stocks would be dictated by the price movements, would be generally dictated by the order wins, also by what the numbers, quarterly numbers come out for these IT large caps. And within the IT space also, I feel mid caps could have a better placing, and the mid caps could fall lesser than the large caps, because in the last 6 months or so we have seen, while the large cap IT stocks have been on a down move, we've seen the downtrend being quite prevalent into a lot of these names, say Infosys, TCS, HCL Tech, Tech Mahindra. But on the contrary, stocks like Persistent Systems, Coforge, they have outperformed and they are quality stocks. So I feel quality mid caps should still see some decent buying on dips at lower levels from a positional perspective. And from a large cap perspective, large cap IT perspective, I feel we should just wait for a while before we try to do any bottom fishing here. Wait for at least the results to be announced and the related volatility to get subsided.
Got it, sir. And sir, before the D-Day, most of the focus were on the pharma stocks as well. But now the D-Day has finally ended. Now pharma stock have got a relief and they're soaring. In the early trade, I saw it soared 4%. So what's your outlook on that? And what are the key pharma stock as an investor we should keep in mind?
Gunjan, if we see the pharma stocks, and surprisingly see the pharma sector was out of the list that was announced by the White House. And if you see here, all these pharma stocks which have a good exposure to the US, say Sun Pharma, Divi's, Lupin. So all these stocks we feel should be on radar, and one should focus on large cap pharma, because see, if you see large cap pharmas, they've stood the test of time well, might have given us slightly slower returns. But yes, in terms of down moves or the selling pressure into the markets, they've withheld, and they have outperformed in a way. So my sense is that pharma stocks as of now, they are out of the list. So from a short term perspective, yes, they are right now into the limelight. But with Trump being unpredictable, we need to see whether the next few statements that come out from the White House does mention pharma, because right now it is missed, but he may include it later. So we might have to just take every day as it comes. But however, just keeping aside the entire Trump saga, all these pharma stocks, say, my request to all the viewers also would be not to divulge into any kind of a mid cap or a small cap pharma stock. Go for a large cap stock, and with at least a 3 to 5 year horizon, because these short term shocks generally get digested into the long term, and business comes back to normal. So I feel that large cap pharmas should be favored in comparison to the mid cap space.
Got it, sir. Sir, with your talk, I want to ask, so the market jitters, market were having the jitter because of Trump. Is it over, or we can still have more jitter? It can go in more swing. What's the outlook?
See, markets were jittery because of Trump, and Trump has promised that he'll always be unpredictable. So I guess that volatility could continue. But yes, see, the major part of the volatility or the uncertainty surrounding Trump is now kind of out of the way. And see, in a way, if you look at these tariffs, China is at 54%, India is at 26% right now. So this could say give some opportunity to India also to increase their exports into some sectors where China was predominantly leading. And my sense is that rather than getting hit and seeing which sectors are getting impacted, we should also try to in the next few days of time, in the course of time, study that which sectors are going to be positively impacted, or at least it could be better than China. So there, the markets will reward those sectors also in a way. And having said all this, I feel, see, the first set of tariffs would be applicable. The 10% would be applicable on the 5th, and the balance would be on 9th of April. But between these, I guess there would be a lot of backdoor communications that would go between the Indian Commerce Ministry and the White House. And I'm sure, I'm confident that there could be some deal which would be made out of that. So every day, every hour, we'll have to be a bit vigilant of what comes out with respect to these tariffs. And they're not fine. I see, even though they've announced it, but they're subject to negotiations, and they are subject to few changes. And I'm sure with the kind of relationship we have, India has held with the US over the past several decades, it should not be too difficult. May take time, but should not be too difficult.
How do you see these tariffs impacting the foreign institutional investors' sentiments towards the Indian equities?
See, if you see the last 6 7 months, except the last 15 days out of that, 15 or 20 days, FIIs have been net sellers in the cash segment. They've sold left, right, and center across all sectors. But last 15 20 days, I guess they've at least started to reduce their selling, or they have come into the buying side. What could happen with these tariffs is that while you are seeing some short-term volatility, it might lead to some outflows from the emerging markets. But gradually, with all the supply shocks or the supply chain being readjusting after these tariffs, I feel then slowly and steadily the FIIs would come back to India, because India is still a promising market. Except these tariff tantrums, we are also the biggest consumption market of the world. So, and we have enough consumption power, and that is the reason we are saying that these tariffs, the tariffs that have been levied by the US over the entire world, beyond a point, might not have a significant impact for India, given our consumption status. So, I feel it's just a time before all these things get digested and the market comes back to normal. And slowly and steadily, I feel, given the policies that the government has announced in the budget, and they're so proactive with all these policy measures, so they would definitely come up with something which would be favorable for the FII investment scenario also, and that would bring back the FIIs. At least not even, at least not, if not in big numbers, then yes, the outflow somewhat could be stemmed.
What are the key levels investors should watch for Nifty and Sensex now amid the whole Trump saga going on?
See, if you see Nifty levels, I feel 23,000, 22,900 positionally remains an important support. Derivative data also hints that this zone could be a sticky zone before there could be any further fall. So yes, I feel that 22,900, 23,000 zone will be an important support zone. But from the upside to materialize, there are a couple of levels that we need to watch out for. 23,400 to 23,500 zone could be a cluster of resistance, and above this zone, if Nifty manages to sustain for a day or two, we could be heading to 24,300, 24,500, and that could be a bigger short covering move about 23,450. So 23,450, 23,500, watch out for this level. And what we feel is that next few weeks could be a stock pickers market. So rather than becoming pessimistic on the Indian economy, I guess post this correction, which has started from September, October, we are already 8-9 months into the correction, and now slowly and steadily the bottoming out process would begin, or it's already underway. So, and in a bottoming out process, what happens is that there are few shocks, there are few volatilities, volatility that could sometimes heighten. But one needs to watch out for good quality stocks that has stood the test of time, and from a long term horizon, focus on large caps and quality mid caps.
All right, sir. Thank you so much, sir, for giving your insights on Republic Media Network. And thank you so much for joining us.
Thank you so much, Gunjan, for the invitation.